Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is accounting changes, changing accounting estimates. When we are talking about accounting changes, we have three types of accounting changes. Changing accounting principle, we have a video about it, and it is in our video description. Changing accounting estimate, that is our topic today. Revise and estimate based on new information or new experience. For instance, change depreciation methods, estimate useful life, estimate residual value, change actual estimates pertaining to a pension plan, and so on. And also changing reporting entity. We also have a video about that in our video description. Okay? So changing accounting estimates, revision of an estimate may result from new information or new experience. They are accounted for prospectively. What does it mean? We only change from now on. We don't look to the past. The past remains in the past. Disclosure note should describe the effect of a change in estimate on income from continuing operation, net income, and related per share amounts for the current period. So let's go to our Excel file and see how it works. And guys, our Excel files, they are free and the link to download it is in our video description. So Skype Incorporation switched from the sum of the years digit depreciation method to straight line method in 2021. So what is our data? Equipment purchase January 2019, so 2 years of usage. $90 million. Useful life, 5 years. Residual value, 6 years. So let's see what do we have. 2019 depreciation equal 90 less 6 times 5 useful life divided by 5 plus 4 plus 3 plus 2 plus 1, sum of the digits method, $28 million. 2020, 90 less 6 divided by 4, not 5 less 1. Oh, sorry, it's not divided, it is times. Divided by 5 plus 4 plus 3 plus 2 plus 1, 22.4. So the accumulated depreciation at the end of 2020 is 50,400,000 dollars. Oh, whoa, whoa, whoa. Okay, now we are at the beginning of 2021. We are moving from sum of the years digits to straight line method. So, how much is our booking value? Asset cost, 90. Accumulated depreciation, 50.4. So the book value is $39.6 million. Residual value, $6 million. So the amount to be depreciated will be 33.6. Remaining useful life, 5 years. However, we got 2019, we got 2020. We have 3 remaining years. So 3 remaining years. And now depreciation 33 divided by 3, $11.2 million per year. And the journal entry, just a regular depreciation expense journal entry, depreciation expense, accumulated depreciation. So here, we don't go back to previous years. We only go back to previous years uh, when we are changing principles, when we are changing. Whoa, 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 whoa. Come back here. When we are changing accounting principles. Okay, accounting estimates, we don't go to the past. We don't go retrospectively. Okay, guys. So what do? We find the actual book value And then we start the new depreciation. Okay, so nothing so hard here. Okay, guys, so thank you so much. Questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.